Okay, champs, welcome back to Libertas Trading and welcome to the event preview for Canadian inflation on Monday, the 17th of November 2025. So, just a quick heads up, apologies if there's any noise interference. I'm in an office in Milton Keynes, don't ask, but hopefully this sounds good for you all. So, just on this print today, not overly excited about it. I mean, if we get the right numbers, it could be worth a scalp, but we've basically got the Bank of Canada in sort of wait and see mode at the moment. There's only 7 basis points of cuts priced in for the remainder of this year and the whole of next year. So basically, in terms of any medium term moves, there's probably going to be a nothing burger today, but we may get some scalping opportunities out of this. So just head into the tradable scenario sheet. So the numbers we're looking for here. So these numbers are mainly for a short term scalp. If I were to be trading this on a medium term reaction, or a medium term play, I'd really want to be looking for some larger numbers. So I'd want to be looking for like a 1.8, a 2.8, a 2.7, and then on here sort of a 3.3, a 3.4, a 2.5 bare minimum, to be fair. So yeah, these numbers are based on a scalp. If you want a medium term play, crack on, but I would just look for something a bit more surprising, something that may move rate markets, something that could get the Bank of Canada's attention. We do rarely get that from Canadian inflation, but if we do, it's worth keeping your eyes peeled. So for a dovish reaction, quickly just to mention these data points. So I focus on three. So we've got the headline year on year, which is a little bit more volatile with food and energy prices included. So I don't have much emphasis on this one, but I do still give it a watch. And then we've got the CPI median and the CPI trimmed mean, which are the Bank of Canada's preferred core measures and the ones that feed into their own inflation Bank of Canada core CPI. So these are the two ones to really look out for. But I do keep an eye on this one because it does cause some headlines. You can imagine on Twitter and stuff, it does get traders' ears perked up. So, I do measure all three, but mainly these two are the ones I'm trading off. So just on the headline number, for a dovish reaction, I'd be looking at 1.9% or lower, which would be back at the one handle below the midpoint of their target range and below the minimum. And then for a hawkish reaction, I'd be looking at 2.4%, which is 0.2% above the max. It's in line with last month's report, which would show that expected progress on inflation hasn't been made. So for CPI median, I'd be looking at 2.9% on a dovish reaction, which would be below what we assume is the minimum. So basically, it looks like a bit of a finger error here. So we had 2.0 by the Bank of Montreal, but they probably meant 3% because that's just way below what we expect for the inflation to come out. So we're going to assume they meant to say 3%. So 2.9%, which is below what we assume is the minimum, is the lowest figure since March, and it'll be back at a 2 handle, which puts us just below the 3% target band, which would show good progress. And then for a hawkish reaction, we'd be looking at 3.3% or higher, which would be above the max and the highest since February 2024. And then for CPI trimmed mean, we'd be looking at 2.8% or lower, which would be below what we assume is the minimum and the lowest since January. So again, on this one, we had a 2% entry from the Bank of Montreal, which looks like a typo. So the actual minimum should be 2.9%. If we assume correctly that they meant to put 3%, which they probably did. And then for a hawkish reaction, we'd be looking at 3.2% or higher, which would be above the max and the highest since February 2024. Now, just quickly looking at inflation in Canada over the last few years. So here's the trim mean and the median, and you can see here, we bottomed out sort of August, September 2024, and then since then it's just been a steady decline upwards. So if we do move higher, it could cause some upside in the CAD. The only thing I'm worried about is stagflationary concerns. So a bit like the UK, we've got low growth, employment that's looking a little bit weaker, and then we've got inflation that's rising. So I would be a little bit more cautious on trading upside in the CAD, especially in the medium term. I think it could be good for a scalp as last month's was, but in the medium term I'll be a bit more cautious. And then for dovish reactions, it'd be really nice if we can start to see some prints lower in that, which as I mentioned would be the lowest since January and March respectively on these prints. So as I mentioned, I'll mention it again. So for the medium term plays, it's not something I'll be looking at getting into just on how poorly the last tradable prints have reacted, and because the Bank of Canada are basically done with their rate cutting cycle for now, so we don't expect much change in the rates markets. I'll just quickly show you last month's prints as a prime example on this one. So this was from last month. As you can see here, we printed above the max on the medium. The trim only printed 0.1% above consensus, which was in line with the max. So, they all come in green. It was a fairly solid print. That Bank of Canada core year on year came in at 2.8%, which is pretty solid. And, we only had sort of a 4-minute reaction here. So in the medium term, we would have got shafted. It completely reversed within about an hour and a half. But just looking at the quick scalping reactions, you can see actually if you got filled around these levels, you could have made a nice 1-to-1. So although the data wasn't amazing, we still could have made a little bit of money on this one. And then we'll quickly look at May's reaction. So here in May, we were quite close to Liberation Day where markets weren't trading great, but you can see that CPI trim came in above the max. It came in above the max on the median as well. We sort of bottomed out after about 25 minutes here, but even then, you probably would have gotten stopped out here if you moved stops to break even. So wouldn't have been a great medium-term trade at all. And then you can see in the afternoon here, price just completely reversed. And then just looking at the short-term reaction for this one. Yeah, massive price action in the first 5 seconds, which would have been worth waiting for a pullback, which was actually different to last month, which is a bit annoying. So it's difficult to know when to enter when you get these sorts of mixed reactions in consecutive tradable prints. But you can see here, if you did wait for a pullback 10-15 seconds, you're probably getting a 1-to-1 there, and then you would have, if you didn't take profit down here, you could have gotten out of break even. So no harm done on that one. But again, decent numbers and, pretty, not amazing price action, especially looking for anything more medium term. So they're just 2 reasons why I'm only looking for a short-term print here, but just going on the tradable reactions anyway. So for a dovish reaction, I'd be looking for dollar CAD longs, which is the purest rates play for the Canadian dollar. Dollar is the strongest on the session so far. We've had a much more hawkish repricing for the dollar rates the last week, and economic growth differentials remain strong, although we've been a bit blinded by the US government shutdown recently. So we've got upward momentum on the pair. So we're going with the trend on this one. 140, 150 could be a nice place to take some profits, and we'll just see how the pair reacts at that level. So quickly looking at the dollar CAD chart, you can see that since sort of June, July time, we've been trading upwards. We're sort of in this channel, in the middle of the channel. So looking at taking profit around 41.50 could be quite nice. We've got prior support in the past, and we've struggled to break through in the past as well. So that could be quite a nice level to look at taking some profits. And quite a nice little pair really. We're expecting more upside for the dollar, so this could be a good one. And then for a hawkish reaction, we could look at some pound CAD downside. As everyone knows, I love selling the pound. So we've had weaker growth and labour prints from the UK. We had negative housing data come out this morning. We've got the budget coming up on the 26th, which is expected to be bearish the pound, so we may see some selling heading into that. Technically, the pair has found some resistance up at the 200 daily moving average, which has been well respected in the past and looks primed for some downside. The risk, of course, is UK CPI Wednesday, but could be quite nice moving stops to break even ahead of that, maybe taking some profit and having a free shot into UK CPI. So just looking at the pound CAD chart quickly, quite a messy little chart to be fair, but you can see we're sort of in between this range here, and this is the 200 daily moving average, which I spoke about, which has been quite well respected in the past. So that could be something to look out for. Some more downside on that one, maybe targeting 182 or maybe 181, where we've got some sort of support and resistance there. And then with short-term scalping plays, as with most Canadian data that I scalp out of, I'll be sticking to the euro and the dollar, deciding based on how euro-dollar is trading at the time of the print. But it can be very profitable trading other pairs if there's strong price action before the event. We just need to be careful on the spreads and therefore where your entry will be. If price action isn't at my target within 4 to 5 minutes and we're not moving in the right direction, I'll just close out where I am. Canadian inflation data in particular, it's not a great print to trade. It can be a little bit risky. So if you're new to trading this sort of style, I would just personally keep my risk a bit lower, which I'll be doing anyway, to be fair. And also, if price isn't doing what you think it should, just get out and no FOMO. So be careful of pullbacks, as I mentioned. So within the first 10 to 15 seconds on the back of this data as well, I'll be looking at entering a trade. Last month, it would have been better to enter straight away, but in general, for Canadian inflation data, we do get some wild swings and some wild pullbacks, especially if the deviations are quite large. So I'll probably be waiting sort of 10 to 15 seconds, and I'll just be waiting for price to settle down a little bit, and then I enter, and usually that's when price sort of takes off. We don't usually get massive full reversals in Canadian data, but we do get some wild swings, so always worth being mindful of. As I said last month, it was great to enter straight away, but usually Canadian data, we get large pullbacks, blah, blah, blah. Sorry, I repeated myself there. So for Euro CAD, I'll be looking at a 12 pip target. And then for dollar CAD, I'll be looking at a 13 pip target. So good luck, guys. Any questions, give me a shout, and remember to like and restack. That would be great to support the channel. So yeah, good luck, guys. Any questions, just give me a message.